Ajay Shah, Senior Fellow, National Institute of Public Finance and Policy, joins in live from New Delhi. Ajay, good morning. Thanks for taking time out and joining us on ET Now today. Now, the Indian Central Bank and PSU bankers have had a meeting yesterday where the RBI seems to have indicated that there is no pressing need for a CRR cut in the economy as yet, contrary to building up of expectations that RBI will oblige with one in the January policy meet. Do you concur with the RBI stand?
Yeah, I think that RBI is on the right track. We are in the midst of an important inflation crisis. From February 2006 onwards, in every single month, the year-on-year CPI inflation has been above 5%. And we've just had a big rupee depreciation that is going to feed into prices. While it is true that in recent weeks food prices have done well, we're not yet out of the woods. And I think we have to hang in there. We have to do the painful medicine of contractionary monetary policy until inflation comes back between 4 to 5%.
But Ajay, I mean, given the RBI has hiked rates by about 175 basis points in the last 18 months, given how growth has sagged, how much of unwinding of those rate cuts do you witness or rather expect over the next 12 to 18 months?
The fact that there has been 175 basis points of hike does not change the basic problem that we have. We have a problem in that on a horizon like 90 days, inflation is roughly 8% and the policy rate is roughly 8.5%. So you still have a very low interest rate expressed in real terms. That is a pretty expansionary stance of monetary policy. So I think we've got some ways to go in terms of fighting inflation. We are not done yet, and I don't think it is correct to say that RBI is being particularly contractionary as of yet.
Ajay, the fiscal deficit number for the year 2012 was 4.6%. Obviously, our Indian government will overshoot that. So what to your mind went wrong with their calculations?
It was a mix. To some extent, it was badly thought out right at the inception. To some extent, when there is a slowing economy, you will automatically get a little weaker tax collections, so the deficit will get a bit worse. So it's been a combination of these factors.
Do you think the fiscal deficit for this year, this financial year, will be above 6%?
I don't follow the fiscal numbers with great care, but I would not be surprised if the true fiscal deficit is well worse than 6%.
Ajay, let's chat about inflation. How have you been reading the data, particularly on the food side, which has slipped quite sharply from the top? I mean, do you see it, springing any surprise by a leg up, or is it genuinely cooling off according to you?
The most useful way to think about inflation is to break down the CPI basket into tradables and non-tradables. So with tradables, all that matters is the world price. Okay, so nothing you do in India matters to what is the tradables price. It's just the world price of steel multiplied by the exchange rate, which gives you the Indian price of steel. So by and large, with tradables, we have suffered a shock to inflation because of the recent rupee depreciation. On non-tradables, which includes food, there's much more of a domestic economy story. Now, in that, it is very important to focus on inflationary expectations. If the households and if the firms are expecting 10% inflation, then they are going to wire their behavior. The way in which a firm raises prices, the way in which a household demands higher wages, the way in which a firm is willing to pay higher wages. All this is predicated on how people see inflation over the next 1 year. Now the trouble is, because we've been in this inflation crisis all the way from Feb 2006 onwards, the households and the firms have started expecting double-digit inflation. The RBI runs inflationary expectation surveys of the households, and it is truly frightening because in many quarters we are seeing inflationary expectations going even well beyond 10%. So that is the heart of what is going on with non-tradables. That there is real inflationary momentum which has got built up in the system. The households demand higher wages, the firms pay higher wages, the firms raise prices, and the thing keeps on going. So while it's true that in recent months food inflation has come down, I would be quite skeptical and I would be quite worried about what's going to come next on CPI inflation because of this inflationary momentum on non-tradables and because of the shock to tradables which has come with the rupee depreciation.
Ajay, I know you've done some extensive work on this, the investment cycle and the linkage of investment cycle to animal spirit. When do you think the real investment cycle in India will start again?
Well, I mean, your guess is as good as mine. The private sector, the domestic and the foreign private sector, has to feel optimistic about where India is going. And that's a very hard point to understand. It's not something quantifiable. It's very interesting to look back at 2001, 2002, 2003. Something flipped in around 2002 and the optimism on India changed. So the hard work of economic reform from 97, 98, 99, 2000, 2001, it all seemed like hard, thankless work, but it added up to a picture. It added up to a message that India was moving forward, India was doing market-oriented reforms, we were interested in building institutions. And then by 2002, 2003, the private sector gained confidence and we got a change in sentiment, which by 2004, 2005 was giving marvelous investment numbers. So these things are not easy to quantify, and your judgment is as good as mine.
Ajay, a year ago or maybe 2 years ago, everybody was comparing India and China in the same breath. But now there is a marked distinction there. Do you think in the near term, destination India as an investment destination will not see any FDI and FI inflows, at least in the near term?
I would definitely not use the phrase any. Okay. India is a big country. India is 2% of world GDP. India is on the horizon of the Fortune 500 firms. India is on the horizon of all large investors globally, and they will invest in India. So, for example, if you look at the recent data for the last 1 year, there has been no significant change in investment into India. So there is undoubtedly a loss of momentum for India, but I would not use the word any.